Welcome to the Equity.Guru Investor Roundtable. It's time to talk about Aequus, the pharmaceutical company. I'm Rob Simpson. Over here in the penthouse with me is none other than Chris Perry. Because he's so much more fashionable than I am, I had to kick TK into Chenna downstairs. I mean, it's starting to embarrass all of us. And then in the far corner, it's Vishal Vatura, who gets to go first on the AQS.V on the Venture Exchange.
Okay, thanks, Rob. So Aequus Pharmaceuticals, specialty pharmaceutical company, bringing proven medications to Canadian patients, and it's focusing on specialized therapeutic areas, including neurology, ophthalmology, and transplant. And I want to show you guys their pipeline here. They actually have 4 products on the eyes launched here, and they also have a few that are doing in clinical trials, preclinical trials, and pre-registration here as well. So revenues flowing in, I guess, from the sales of some of this stuff, but TK will let us know about that. But I want to show you guys this site here, Aqueous Eye Care, where their dry eyes and their eye care products are actually sold. And there they are, the Evolve line. And funnily enough, folks, a pharmacy near my place sells their products. So I will pick one up before I decide to buy the stock.
You suffering from dry eyes, big guy?
Well, I mean, I wear glasses, so I do use eye drops. So I'll give theirs a try.
A little spit on the palm of your hand, man. That's all you need.
Hey, Chris, you talk about the jockey a lot, jockey instead of just the horse. So Doug Jansen's the CEO. I don't know about the rest of the staff, but these guys are based in Vancouver.
I'd be dancing with Doug Jansen. He's a mechanics guy, right? He's a guy who's getting products to market. The deal with Aequus is they want to find existing products that can maybe be upgraded, maybe be brought into a different use type, run through a quick approval process through the regulators, and then sold to a larger market. So, for example, the dry eye situation, they've got, the existing product, I believe, is a lotion or a cream. They switched it over to a different delivery vehicle and allows them to rejuvenate a product that's been on the market for however many years. It's much easier to get a different use case for these products than it is to get a new product. So that's where they've basically been going, is saying, look, here's product number 782 on Pfizer's SKU list. They're not really putting much attention to it. If we could upgrade it to a different format, then it's like a whole new product that goes to a whole lot more people. And maybe it can be our number 3 SKU. So they've done a lot of that in the past. If you look at their losses, because they do lose money, 3 quarters ago, they lost $1 million. 2 quarters ago, 620K. 1 quarter ago, 479K. So it is a money loser. It's not sexy. If you had a cure for cancer or a cure for COVID, you probably get in front of a whole lot more investors. This is a bricks and mortar kind of deal. Or the picks and shovels, I would say, be close to it. They're getting the work done. They know how to get products out to market or get those products that are already out to market better to market. And, in talking to them, I like what they were doing. I will say, really struggling though to resonate with investors. That's something that they really have to retool to do. I believe they're doing that. And I believe that once they get to that break-even point and beyond, the investors will find them.
Well, I'd say it'd be helpful if they had an investor relations PowerPoint as well.
They don't do, there's not much there. TK, what's your analytics?
So in the past, I've gotten ridiculed for not exposing my secret sauce. So I thought today,
we're doing any exposing on Zoom.
No, not this one.
No, not that exposing.
I swear it's ranch.
That's $10 an hour for that kind of exposing. But this
got the same price as downtown. Okay.
But I have 6 filters that I always look at quickly, just to get a run.
Six filters?
Yeah. 6 filters.
Check your watch. You only have so much time.
I'll try go through them quickly, but it's mainly revenue growth, earnings, the return on invested capital, shares outstanding, their ability to service their debt, and the growth of cash. And Aequus actually has 4 of those ticks. So their 5-year revenue growth was 30%. Their 5-year earnings growth, so the negative earnings are decreasing by 30%. So since in the last 5 years, their return on equity or return on invested capital, though, is still negative. So it's in the 186% on average in the 5 years. But I think last year it was 26%, negative 26%. So they're close to break even on their return on invested capital as well. Their shares outstanding, because they're in the development stage with some of their products, has increased by 19% in the last 5 years. So they do issue stock as well. And I would put that as a negative for now, but it's better than some of the other companies I've seen with 100% increase in shares outstanding. And for their debt, they have 2.12 million in debt and $3 million in cash. So they have a good cash position as well. And they have a negative cash flow, but it's decreasing as well. It's increasing. Oh, sorry, it's less negative than it was 5 years ago. So they match 4 of the pillars, and that's amazing for a company in its stage of development. But like Vishal said, they do have majority of their products launched already. They only have a few in the pipeline that are still moving to the next stage. And I think this goes hand in hand with having a capital allocator or the CEO and CFO with close to 19 years of experience in the life sciences field. So it's showing in the accounts as well.
How's it reflecting in the charts, Vishal?
So I just want to zoom out here on Aqueous so you guys can sort of see, but it's not one that has reacted too well. When it did IPO back in 2015, it's literally just been in a downtrend. I want to keep this a bit simple. You can see I've drawn a trend line here that is sloping upward, and it's the only one really that I could draw going back up to 2015. Most of the trend lines that you would draw are downward sloping. So I don't know if this is, either the company's not doing too well to expose themselves. Again, we talked about they don't have much info for investors relations, but the stock has been, sliding. And finally, we might have some hope here. There was actually a pop in January at the beginning of this year, but it seems there was more of an overall pop in the biotech and pharmaceuticals that we saw at the beginning of the year with, I guess, some small caps being chased. But after hitting 30 cents, we just gave up all those gains and some hope. That's why I want to say there's some hope because we can actually draw an uptrend line here. And the next few days will be quite important because we are actually about to retest that 11 cent area on the chart.
If we're talking, go ahead.
I was just going to mention though one quick thing. If I show you guys this, it's not traded too often, right? I mean, look at this. Today there's 584 shares traded. Apparently they have an average volume though of around 64,000, but let's take a look at the historical data. Okay, that changes things. I mean, take a look on September 29th and the 30th. We actually did have 6 figures of shares traded. Today just seems like a really slow day. 584 shares traded, whereas the rest of the time we've had over 100,000 or 5 figures worth of shares traded. So.
All right, so dollars and cents. I'm an investor. Chris says they need to expose themselves in a different way than what TK was talking about. What do we think about it, Aequus, from that standpoint? Spending my money, CP.
Well, if we can get that chart back on 2021, I think what's really interesting about, like, if you go back to the beginning of this company, pretty low volume for the most part, consistent fall offs. There was a moment back in 2017 where you could get this stock for 13 cents, where it was a lot less developed than it is right now. Fast forward now, we've had some ups, we've had some downs. The big up earlier in the year is a lot of buying. Like, someone came in and took a substantial position. It wasn't just there's some news out, because we were writing about the company back then. There wasn't that much news. Someone came in and took a block of this thing. And then if you notice the trading subsequently, yeah, there's some red days, but not nearly the size of those green days. So that tells me that guy or guys or girls or thems still holds the stock. And they're still sitting on it, even though it's down from, where they got it up to 30 cents, down to 12 cents. So something's cooking. I'd be likely to think that if I was to buy it at 12 cents, I'm getting a pretty good deal and I'm riding alongside the big boys. I think there's not nearly as much risk here as there would have been in 2017 or even early 2021. We're seeing the right movements on the financial side. Yeah, they haven't picked up any new deals, but I'm kind of okay with that. If they apply the resources they have to what they've already bought and get those things really selling, then they can have as much money as they want after the fact. So with your 5K, man, I'd be putting a lazy 2, maybe 3K onto this thing and just getting ready for the next ride. It really, over the course of the last 3 years, it's at its support level, right? It's never really, for any extended period, gone much deeper than where it is. So, if I combine that big money sitting there waiting with the support that it already have, I'm comfortable giving this thing 6 months and seeing how it works out.
And knowing when to jump off before the big boys. And all right, so $3,000. What are you committing of my cash there, TK? And you're muted, by the way.
Yeah, I have to remember to bring it back up. I'm going to put the total $5,000.
Ooh.
Oh,
Wow. Can I get one of these? Can I get one of these?
TK was smoking cigars over there.
Sadly, that is reserved for the resource companies, not the pharmaceuticals. But it's because the fundamentals just tell me that the business model is obviously working, and they already have products that are out and tested, and they're just now increasing the bottom line by doing the other products, and that's a sure as hell sign of a working business model, especially in the pharmaceutical space, specialty pharmaceutical space.
Wow. Michelle, what are you doing, man?
TK was probably that big buyer that Chris was talking about back here in January. He just didn't tell us. But I follow Chris's advice there. I think I'm putting in, I might approach it more like with the charts, more technical approach, but I do love the support area we're at. They do have products, cash is coming in. I guess one thing we could sort of criticize management on is the news flow, maybe get some sort of catalyst going, because it's been a while, but I would probably enter a small position, either 1K or 2K here. And my trigger would be the breakout of 16 cents here. And hopefully there's a catalyst or some sort of news that backs it. We should probably mention that they will be reporting earnings next month. So nothing too soon, but November 26th, they do report earnings. But I would add more on that break of 16 cents, and hopefully there's some sort of catalyst as well to go with it.
All right.
Before you close it out, can I ask a quick question? Can I borrow more than you have you offered?
Sure, you can take my $5,000, and then how much you want to throw on top of that? Just so
I think 10 is okay. I promise 10 is okay.
TK's standing at the ATM at the casino at 2 p.m. saying, "It's okay, it's coming. This thing's going to pay out."
TK, why don't you call RBC, man? Get some derivative product based off of.
Jeez. Just 3 more Crown and Cokes and another 10 blackjack hands, and you're good to go. All right, gentlemen, wow. Let's average that out. We got 1, 3, and 10. So we're looking, we're blowing my 5. Well, let's say blowing my 5K. Anyway, there you go.
The key here is to go and buy some before TK gets up in there and blows the price up, right?
AQS on the venture exchange. It is Aequus Pharmaceuticals. I'm Rob. That's Chris over there. That's TK down there with the nice shirt. And that over there is Vishal. Of course, make your own decisions. Do your own research. We can't guarantee a damn thing. This is just guidance and education. We cannot guarantee any future results. We'll see you next time on the Equity Guru Investor Roundtable.